We're live. Hi, this is Eric with Low VA Rates, wearing my red shirt as always, as we always do on Friday. Wish you guys could see the crew that's here with me. They're all in red. That's what we do here. As a reminder, we wear red on Fridays, and red stands for remembering everyone deployed. And even if you're not deployed, you have family members that are in the military, this is kind of an outward expression of supporting the troops wherever they are. So, that said, today we're going to talk about whether or not VA loans have PMI. Okay, PMI stands for Private Mortgage Insurance. Okay, I'm just going to put mortgage insurance here for those that are tuning in. The real question here is, do VA loans have mortgage insurance? Okay, the answer is no. I could turn off the camera right now, you guys would have learned something today, but I want to educate everyone that's watching, and hopefully we'll get some questions, so be thinking. We're really hoping that these live videos start garnering more questions. Even if you just leave them, if you can't stay and listen to me talk for the next 3 or 4 minutes, you can type them in and leave them and we can answer them later. But that said, VA loans do not have mortgage insurance. What VA loans do have, however, is something called a VA, do you see that up top? Oh, they don't see it, so right here, VA funding fee, okay? I do not have the best writing in the world, but conventional loans, okay? That's what most civilians get. If you didn't serve in the military, you cannot get a VA loan, but if you have a conventional loan, you either have to put 20% down when you're buying your home. So if you're gonna buy a $200,000 home, you have to have $40,000 liquid in the bank to be able to bring to the closing table, okay? Or I guess you could sell another property and take that money and put it down, but you have to have 20% down to buy a home with a conventional mortgage. If you don't put a full 20% down, then you are going to pay private mortgage insurance. You'll go get insurance from a private company, somebody other than your mortgage lender, and on top of your interest and your principal and your taxes and your insurance, you're also going to be paying somebody else, a private company, for mortgage insurance. That's why so many people try to put the full 20% down. Now, veterans, as we've talked about many times, you get 100% financing, okay? That means you get to borrow the full $200,000. You don't have to have any money in the bank. We hope you do. We all like to have money in the bank, but you don't have to put it into your home. You don't have to make a down payment, and you don't have to pay mortgage insurance. Here's how the VA loan works as far as mortgage insurance is concerned. I'm going to grab a eraser here. VA loans, as I mentioned, have a VA funding fee. There is a VA funding fee that you pay up front, one time, when you get your mortgage, okay? And it can be anywhere from the mid-3s all the way down to 0% of your loan amount. So for example, let's just say you're buying a $200,000 mortgage. I'm going to keep math simple here. Let's just say your VA funding fee was 3%. It's actually a little bit higher than 3% in some cases. I better change this. If you're getting a VA loan for the first time, it's closer to 2%. It's a little bit higher than that, but I'm just using simple math today. So you would have how much? You'd have $4,000 for your VA funding fee. That gets added onto your mortgage. So you're buying a home for $200,000. You're going to actually borrow $204,000 because you are going to borrow your VA funding fee. Okay, that's going to be your loan amount. And then you don't have to pay anything monthly. Like I said, this is an example only. The VA funding fee we have on our website at Low VA Rates. You can go and search for our VA funding fee table. It's different if you have served in the National Guard. It's different if you're disabled. It's completely waived. So if you receive VA disability, the VA will waive the funding fee. Okay, so we're going to kind of wrap it up here. I'm hoping maybe we can get some questions. Again, just by way of reminder, no, VA loans do not have private mortgage insurance. You do not have to put money down. You do not have to pay anything extra every month. You have the best loan opportunities, bar none, from having served in the military. So it looks like we might have a question.
Courtney asks if the VA funding fee is cheaper than private mortgage insurance.
Ooh, Courtney, I may be stumped here live. Let me get back to you in the comments. I would just hate to put something out on the web that's not true. I'm going to go as far as saying it's definitely cheaper every single month because you're not paying anything. But it's going to be different because if you go and buy a home for $200,000, you borrow $4,000 for mortgage and for VA funding fee, and then you sell your house or you move 3 months later, well, in that case, private mortgage insurance would have been cheaper because you only would have been paying it for 3 months, and it certainly wouldn't have equaled $4,000, and you would have been gone. So I don't even know that I can give you a straightforward answer, but I hope what you're asking is it better off for me to get a conventional loan with mortgage insurance or get a VA loan without mortgage insurance? I'm going to tell you, without a shadow of a doubt, clear as the sky is blue outside today, it's definitely cheaper to use your VA benefits because that VA funding fee is only paid one time. It's paid up front. You don't have to put any money down, and it's definitely a better option. I could not think of a situation where a veteran should go and pay mortgage insurance. Now, if you have 20% to put down, now in that situation, you might consider which is better, putting 20% down and getting a conventional loan, because remember, you would have no mortgage insurance, or do I put no money down and get a VA loan? And that's a whole nother conversation. Matter of fact, with somebody on the crew here, maybe we can talk about that next week, or in one of the upcoming weeks, we can do some side-by-side comparisons as to whether or not putting money down as a veteran and having a smaller loan amount, or borrowing more money and saving that cash for something else, in which situation is one smarter than the other. But I don't want to get too far into the left field. Other question?
Do you have to pay the VA funding fee on a refinance?
Great question. Yes, you have to pay the VA funding fee on a refinance, just like you have to pay mortgage insurance, private mortgage insurance on a refinance, unless, of course, you have sufficient equity. You would need 20% equity, just like the 20% down. However, on a VA streamline refinance, the VA funding fee is extremely small. It's only 0.5%. So on that same $200,000 loan, 0.5% is, I do my math right, $1,000 instead of $4,000. If you're disabled, once again, the VA funding fee is waived for all disabled veterans. Now, if you're doing a cash out refinance, which we have been talking about quite recently, if you're doing a cash out refinance, your VA funding fee is actually a little bit higher than it is when you purchased your home. Okay, and that's because you're yanking equity out of your house. It's a bit riskier perhaps in the eyes of the VA. Let's talk real quick about what the VA does with all of these funding fees. I never like making things up, so I am going to give a disclaimer today. I don't know how many VA loans were done last year. Look down in the comments later if you're watching this. Someone on the crew here, if you can get back to me, I'll find that information on the VA's website. But let's just say the VA did 100,000 loans last year. Okay, and again, when I say the VA did loans, the VA doesn't do loans, but let's just say the VA guaranteed 100,000 loans last year. And let's just say they made, on average, $2,500 on every single one of those VA funding fees. Okay, they've got all sorts of money sitting in their fund, to the tune of, hundreds of millions of dollars. Well, if a loan goes belly up, if somebody in a VA loan runs into financial hardship, maybe there's a death in the family, who knows what happens to where somebody can't afford to make their payments, what happens is the VA, from all that money that they collected from the funding fees, they then help cover all of the losses or some of the losses, depending on different situations, for the lender. And that's exactly why the VA funding fee is there. It does the same thing as private mortgage insurance, but in what I believe is a much more efficient and safe way. Any other questions? Okay, so there you have it. Tune in next week, and we thank you for watching.